Hello and welcome to The Informed Investor. Well, after learning about the need for savings and investments, it's time to take a step forward now to understand about different asset classes. We begin with the first lesson, the first asset class, which is equity. So what is equity? To help us demystify that, we have a very special guest today. We have Chitra Ramakrishna, who's the Joint Managing Director at the National Stock Exchange, to answer your questions and tell you what equity is all about. Thank you very much, Chitra, for joining us today. But there's a very interesting first question. Really, I want you to listen to, and let's start our discussion with that.
Hi, my name is Kirti and I'm from Bangalore. My question is equity a synonym for shares or is it different?
It's amazing how we've jargonized the whole equity thing, right? I mean, people understand shares, but we say equity markets. People understand stock market, and then we say equity market. Are these two different, or is it the same thing?
Well, actually, in a technical sense, if you see, shares include many kinds of shares, and equity share is one of those. If you have preference shares, and you have different kinds of preference shares as well. But really, if you see, the whole savings piping into the market has come through this instrument called the equity shares, in a sense, and that is why the two are used synonymously. And today, all the shares that we trade on the exchange are really the listed equity shares of companies.
So when I say equity, just to understand this better and demystify this for our viewers, what we're really saying is that there are companies that are listed, and we'll talk a little bit more about how the whole listing thing works with you, but there are companies who are issuing really ownership to other people. Is that the best way to define equity? That it's really taking an ownership in a company, so you become a part owner through a set of instruments which is called a share? Is that how you would explain equity?
Absolutely, because when you buy an equity share, what you really do is you are putting your contribution into the capital of a company. So you're actually like, like a part of the pool of people who's promoting and who's sort of, taking the risk on that company. And therefore, an equity owner is really a part owner of a company in that.
So when we say that I am buying or selling shares, what am I really doing?
The contribution that you make to a company is in the form of an equity capital is evidenced through an equity share. And such an instrument is something that can be transferred. So, I want to be the owner of company A today, and tomorrow I may want to be the owner of company B, and I may want to liquidate my capital here and move that capital to some other company. Likewise, someone else may want to be part owner of company A tomorrow. How does all this become facilitated? It becomes facilitated only if you make a market available where company A can be traded and company B can likewise be traded. And so when I sell, what I'm really doing is I'm divesting that ownership to someone else.
Okay, let's take one more question for you.
Hi, my name is Payal and I'm from Chandigarh. My question is, what is the difference between the face value and the issue price of a share, and at what price do I get to buy it?
Right, Chitra, when I talk to people who are not very familiar with the markets, the first question is, what are all these prices that are running on the ticker? What are these prices? What is red? What is green? What do you mean when you say this has gone up today and this has gone down today? She's asking a question, what is therefore a face value? That's another word which is used. And therefore, how do I correlate it to what I'm seeing, the price of that particular share?
When you say that you're investing in a company, you're unitizing that investment. And so each share is really a unit of that investment. And so it carries with it like a basic value or a par, which is called the face value of that share. Now, a company may also issue capital to the public, and when it so issues that capital to the public, it may be able to raise money at something beyond just this basic value of that, or the unit of measure of that share. So the issue price can be significantly different, either higher or lower than this face value of the share. So the two are actually different terms. The face value denotes the unit, And the issue price denotes the price at which a company is actually able to raise money when it does, let us say, an offering to the public. And it can
Which
be
is what we call an IPO.
That's right.
Right.
That's right.
We are discussing equity markets with Chitra Ramakrishna, Joint Managing Director of National Stock Exchange. We'll be back right after this short break. Keep watching The Informed Investor.